A warm welcome to Business Daily here on Trust TV. I am your host, Yusuf Akogu. Well, apologies for starting a little bit late. We serve you with our top stories at this time. Top stories there in the world of business. A lot of issues that are happening in the world of business. If you want to know more of the details of those stories, you can pick up a copy of the Daily Trust today, and of course you get details of those stories that we served you on our top stories today. Quickly, we go to the capital market and see how the market fared yesterday. I understand the market closed negative yesterday. 2 days running that we are having market in red zone. The all share index down there 0.09%, and of course the market capitalization losing over 215 billion naira at the close of the market on Thursday. Of course, the volume of shares that exchange hands among investors standing there at 477.371 million, and of course in a value at 5.241 billion in the deals worth 5,539 deals. Quickly, we look at the gainers for the day. We have the like of Adova. Adova, they're gaining a huge 24 naira 20 kobo there to close strong there for 2 days running. Right again, maintaining the top position there on the gainers chart there. Out of about 22 gainers that we had yesterday, Adova top the table there with 10%, and of course followed by NCR also gaining 2 naira 56 kobo there to close at 9.87%, while Motivas, a mining and of course exploration company, also gaining over 4 naira there to close third at a huge 9.87%. And of course, quickly we look at the losers table with the loser chart. We have FCMB, Access Bank, and of course Sterling Bank. All the banks are actually back to the bottom of the table, bottom half of the table rather. Recall about 2 or 3 weeks ago, banking stocks were actually liquid. I mean, they were the most attractive in the market, actually, obviously, because most of them were turning in their Q1 result at the time. But again, the oil sector has taken over the driving seats. We saw the Seplat, turning in their results yesterday at the GM that was held yesterday in Lagos. They're paying about 15% to their 50% dividend to their shareholders, a very huge one there. Of course, Seplat is listed on NGX and of course London Stock Exchange as well. So it's a multinational oil company doing so well there across all the listing exchanges. Quickly, we look at the top traded stock for that day. We have the Access Bank, also the UBA, of course Fidelity Bank, or the banking sector. Of course, it's actually what we are witnessing now is actually a sell-off by investors who are actually disposing some of their holdings for cash. That is why we are seeing a huge amount of trading across the banking sector counter. Quickly, we look at the sector in terms of performance. We see the banking sector also down again 1.35%. Of course, industrial NGS industrial also down 0.01%, and of course, consumer good down 0.10%. The oil and gas sector, like we told you earlier, Adova and of course Seplat, their performance so far is actually reflecting in that sector. And of course, insurance is is also strong there, 0.18%. And you look at the African market, we see that the market in Botswana, rather down there, Southern Africa, closed negative there. Almost we're flat, but on the negative side, 0.01%. And of course, Ghana, our next on the ball, also closing negative there. 0.02%. And if you look at the BRVM, because the Bourse Regionale de Valeur Mobilier is actually a French word. It's actually a market that comprises of Francophone West African, closing strong there, 0.55%. Quickly, if my guest from the stock exchange is ready, we can quickly get his reaction. Okay, we can quickly get his reaction if he's ready, but if he's not ready, we will take a very quick break. When we return, we go into our discussion. Stay with us. Glad to have you back. Let's quickly cross to Broad Street in Lagos. I understand Jamiu Mohammed, head capital market at APT Securities, is live with us via Zoom. Hello, Jamiu. Good morning.
Good morning. It's a pleasure to be here on the program with you.
Thank you very much for always being there. Quickly, let's get your reaction. 2 days running, the market has returned back to the red zone. What is happening?
And it's somehow expected. I've said in one of our previous sections that the market is on the bullish run does not mean that market will not lose some days. So what we have on Wednesday shows that the Boa Foods lost about 10%, or Boa Cement lost about 10%, and that drags down the index because of the fact that our index is being constructed in a way that whenever there is loss in any of these big cap stocks, it will drag the stock the overall index down, and that is why we have it day before yesterday. Yesterday is also one of those days that we believe that the market closed on the negative, and the issue is the way market trended. And if you look at what happened yesterday, you will realize that we have about the market closed, but the market breadth closed negative. I mean, the number of losers of listed companies that lost in the market outweigh the number of gainers in the market. So that's what happened as at yesterday, and we believe that those 2 days to end with negativity. Then we are going to resume on the positive note as we speak this morning, and the market has already resumed on that note.
No, resume. The market is on a positive note currently, Mr. Jami. Is that what you mean?
Yes, yes.
Okay, quickly now before I let you go, what are the reactions you are getting from Seplat? They held their AGM yesterday, and of course they are paying 15% dividend to their shareholders. What is the reaction to their stock already? You know they are quoted on NGS and of course the London Stock Exchange.
Yes, you see the case of Seplat, I think I've explained they are one of the high cap stocks. Before you can move the stock on their high cap, you realize that you have to spend a lot of money. Before you can move stock like Seplat, you have to spend up to 100 before you can move it to the next price. No, the buyer are coming out now, but there's no a particular unit, the board lot that can change the price. That is the 100,000 units at the trade. So that has not happened, and it has not affected the price that is closed yesterday. And you see the activities there is very low. Like yesterday, it traded less than 10,000 yesterday. So these are the problems that we have with this kind of high cap stock. They are mostly illiquid, and in that case, you may not quickly see the sentiment or reaction of investor towards that kind of stock if they declare a good result. So that is what happened in the case of Seplat as we speak. It has not registered any price. Yes, we have seen open interest as regards to the buyers. They're coming out to buy, but yet the market has not favored in the side of moving the price upward.
Jamiu Mohammed, Head Capital Market at APT Securities. I must thank you for your time this morning.
Thank you very much.
Quickly, we switch gear now to our discussion for the day. We are looking at the power sector. Is the sector set to witness another round of privatization? My guest is in the studio, Michael Uluagbemi. Is a founder and co-founder and executive partner at Looming Allied Partners Limited. He's also representing Southwest on the board of Rural Electrification Agency. Good morning, and thanks for joining us on the show this morning.
It is my pleasure. Nice to have you.
So let's look at this. Let's start now. There seems to be a lot of development in the power sector. In recent times, we've seen Transcorp Power being favored to take over Abuja Disco. And of course, Geregu Power Plant is also coming up strong. What is happening in that sector? It is a sector that you play.
Yes. Again, good morning to your viewers, and thanks for having me once again on your program. Yeah, absolutely. The power sector, as we've always emphasized every time I've come on this program, is a sector that is primarily economic and is one that should attract market players. What we are beginning to see, especially with the entry of Geregu Power to the stock exchange as the first Genco on that stock exchange, and also subsequent, of course, Transcorp has always been there, but as an holding company with interest in power. But now Geregu entered as a pure play. What we now have, of course, is an increasing interest in the affairs of the sector, and of course, in ensuring, in attracting investment into the sector. I think it's positive. I think it shows that investors are beginning to have confidence in the reforms, that's some of which I've spoke about in the last 2 to 3 years. And is a beginning of that. However, I will emphasize this. What we do not want to do as a country is to go back to bad habits where we are subsidizing the sector. We are treating the sector purely as a provider of social goods, which generally means that investors will stay away and there will be no money that will go into the sector. It's what we've experienced over many, many years in the refining and petrochemical sector of the oil and gas industry. Is the reason why that sector is almost comatose until now, when the government is beginning to remove itself. And we almost went that route with the power sector. And positive news is that the reforms of the last 3 years, led by the Power Sector Reform Committee, which was chaired by the Vice President, is now yielding good fruits, where we are seeing investors re-entering the sector, and even the stock exchange playing a major role in doing so.
Now, let's looking at what you have highlighted now, a whole lot of development like we have witnessed in the last few weeks. one would have expected that this energy that we actually see now should have something that we should have been there in time past. Though we see some of the, move by the federal government to improve the sector, don't forgetting the $16 billion investment under Obasanjo. Do you think that keeping the power sector in the hands of government control as it is right now is a way to go? Don't you think we should start thinking of how to deregulate the sector?
Yeah, I think the sector is more or less deregulated now. It's still, deregulation does not mean that you will not have some...
total deregulation.
Yes, 100% deregulation. You won't have 100% deregulation of power because, like I said, is both an economic and social good. So you will continue to have government support, for example, in the area of rural electrification, in the area of connecting, increasing connectivity across the country. For example, the grid currently covers less than 40% of the country. If you want to increase the grid coverage from 40 to 60 to 80%, government has a key role to play in that because that is infrastructure. It's almost like your trunk A roads that you have. So government will play a role in that. However, what you don't want is for government to play the dominant role in the day-to-day provision operation of the sector, which is why it's very imperative. And of course, we've also seen further deregulation or even devolution away from the federal government with the last constitutional amendment that was passed by the National Assembly, which was assented to by the president in the last quarter, which now allows states to play in both distribution, generation, and transmission sectors of the power sector. So these are good developments. We will not. There's no country in the world where the government does not play one role or the other when it comes to to both the regulatory and the investments in the sector, because again, government, electricity is a key driver, energy is a key driver of economic growth, and government does have an interest, because the more economic growth you have, then the more taxes government can collect, the more capacity government can build, the more security government can provide. If you know, security is fundamental to the role of government, and where there's no power or electricity, you and I know that insecurity will thrive. So I do not expect government to 100% hand off the sector, and that is not the intent. The intent is that government should regulate the sector properly to ensure that all players play right and also invest right and do the right things. And secondly, do those underlying infrastructural investments in either in rural electrification, in transmission, as the federal government is doing currently with respect to the Siemens Power Project, the presidential initiative, as the federal government has been doing with the Rural Electrification Agency, the board of which I'm privileged to serve, Nigerian people. These are the areas where the federal government should play their role. But then leave the private sector to do the day-to-day generation work, which is being done by the likes of Girego, Transcorp, and the rest of them, distribution, which is being done by the 11 discos, and even some level of transmission and market operation, which can be done as a collective, as is practiced in many other countries by the private sector operators.
There's an operating word you mentioned there, properly. Is the federal government regulating the sector properly as it is now? That is a question that really begs answers. Let's look at the Siemens that you did mention. The federal government did say that the project is still ongoing. That is, I think, about getting to 3 years since that deal was signed in 2020. And the target is actually to achieve 25,000 megawatt, but currently we are seeing that about 7,000 megawatt project is ongoing. What more can you tell us about how effectiveness or how will this deal serve Nigeria if eventually it is completed? But the slow pace is worrisome.
Yeah, this project have taken off slowly, but again, the intent of the federal government is here to able to invest in what matters. I think you mentioned the $16 billion investment that was done by the administration of President Olusegun Obasanjo in the 2006-07 timeframe. That investment was in the generation sector. This investment that is being done in the Siemens project, which is the presidential power initiative, the PPI, is actually specific to the transmission and the distribution sectors. The transmission, of course, being very straightforward, since the federal government is the sole owner of the transmission company of Nigeria that has both the market operator and the settlement. On the other hand, of course, is the discos, which federal government co-owns with private sector operators. So the federal government, I think, owns less than about 40% or holds 40% in trust for all levels of government in most of these discos. However, being a player in that sector, even though it is minority, it has made a decision to, through the PPI, invest in the infrastructure of that distribution. Because if you have so much generation, as we seem to be having, look at Transcorp has raised their generation from 520 megawatts in 2021, they said, to 720, and they are on track for 925. AFAM 3 recently commissioned by the Vice President just earlier this week, brings that power to close to 925 megawatts. The same thing is true about Egmin Power, which is raising its capacity, the NDPHC raising its own capacity. So there's increased capacity on the generation side. If you do not have a commensurate increase in capacity on the transmission and the distribution side, then Nigerian people will not be able to enjoy the benefits of those investments. And in fact, the investors in the generation side will soon start losing money and then be asking the federal government for subsidies. We don't want that. So what the federal government is doing is using its sovereign capacity to borrow and its ability to direct investment. It has created this special purpose vehicle called the FGM Power, which is taking in some of the debt and then on-lending it to distribution companies and directly on-lending it to TCN, which is also owned by the federal government, in order to be able to raise their infrastructure capacity. That is essentially what is going on. Yeah. The process of on-lending, the qualification of projects, determining what needs to be done requires a little bit of scoping. It doesn't happen as a snap of a finger. But I'm very sure that the requirement for phase 1, like you said, which is 7,000 megawatts, can be met in doing a few good things, and hopefully that project will be sustained towards us achieving the 25,000 megawatt capacity. Because today, on nameplate, we have easily 13,000 megawatt capacity of Genco. Maybe if we switch on everything at once, maybe we get 10,000 actually flowing through the system. So unless we're able to raise the transmission capacity and the distribution capacity, we will not be able to enjoy the benefit of those investments, and that's what the PPI is actually doing.
Talking about raising the capacity of distribution sector, many have even said the weak link in the whole of power sector is the distribution sector. Okay. Why are we not having concurrent investment in all of these areas? Distribution, generation, and of course transmission. Why are we not having the same capacity of investment in those sectors?
Yeah, I mean, again, like I've said many times on this program, I've come to actually analyze how we got to where we are. I've always said that there were two fundamental issues that were wrong in the way the distribution companies were privatized during the privatization era of the sector. The fragmentation of the distribution sector leaves so much to be desired and makes it difficult to synchronize the kind of investment you're talking about to make them concurrent with Gencos. There's hardly any Genco that has a disco that owns a disco, so it cannot make a concurrent decision, or the disco cannot make a concurrent decision with them. So all of them are owned by different owners, it's fragmented, so synchronization is a problem. A preferred mode would have been a consolidation, and I believe it is still possible through some kind of regulatory action that can be wielded by the NERC, which again, when you talk about proper regulation, I think innovative regulation by NERC can make it still happen, but we have not seen that. However, what we have seen now in this case is the federal government sort of acting like a lender of last resort, being the single owner that is represented in almost every single part of the chain. Again, because it owns the TCN, it owns 40% of almost all the discos, and it owns a significant Genco because it's the owner of NDPHC, right? And even though it has concessioned the dams, the hydropower dams, the federal government is still the owner. So the federal government is still the only owner that owns something in every segment of the sector, and so it has taken on some of these that capacity to stimulate investment, to initiate investment, and to force its position as a minority shareholder on the discos in order to ensure that they start to invest in concurrence with their Genco partners. I think, by and large, the Gencos have demonstrated capacity. If you look at both in the case of Transcorp, in the case of Geregu, in the case of NDPHC, even the mainstream energy and all of the other guys that own the hydropower stations, they seem to have demonstrated capacity to stimulate investment. What we have not seen is the same commensurate demonstration by the discos, and which brings me to the second point. most of the folks that we sold those discos to basically do not know what they are doing. And it has been demonstrated already by the federal government now stepping in last year to take over 5 of these discos, and Abuja disco, Benin disco, Kano disco, among many other the 5 that the federal government took regulatory steps against to actually change the ownership, change the management. They are not paying even back the bank loans, potentially setting up a contagion for Nigeria's financial sector.
Mr. Michael, we are almost out of time, but I want to ask you this question before we wrap up. In 30 seconds, in about 17 days now, from now, we'll have a new government.
Yeah.
And of course, one of the critical issues that this government will have to tackle is the power sector. You are a key player in this sector. You are very, very experienced. How do you want this government to handle this, the new government rather, to handle this sector, given some of these challenges that you have enumerated?
Yeah, I think the first thing is not to go back to bad habits. I keep saying that. I mean, because I know how easy it is to undo the reform that has already taken place. The reforms that we already have in place were difficult and hard fought. So we do not want to take any step back to second guessing the previous government or trying to play favoritism. I think what the new administration needs to do is to focus and take charge of the reform that it has been handed and complete it. The second part of it is to continue to focus on private sector participation, increasing investment, and ensuring 100% metering. We have to say goodbye to the era of estimated billing. We have to make sure every Nigerian that is using power is properly billed with a meter, and we have to make sure there's a great consequence for power theft. And last but not the least is to ensure that the people that actually regulate the sector in the NARC are professionals, and we bring in innovative regulatory action that can ensure to stimulate investment into the sector. I believe there's a room for us to consolidate our GENCOs and our DISCOs to ensure investment into the sector and increase capacity all around.
Mr. Michael Oluwagbemi, co-founder and executive partner, Loft Inc. Allied Partners Limited, and also a board member of Representing Southwest on the board of Rural Electrification Agency. Thank you for your time on Business Daily today.
It's my pleasure. Thanks for having me.
And with that, we wrap up the show. Join us again on Monday for another interesting part of the show. I am Yusuf Akogu. Bye.